2% right now. Joining us now is Saket Kalia, Barclays software analyst. He's got an overweight rating and a $400 price target on CrowdStrike. Saket, welcome. Got to go straight to the guide here, particularly the full year guide. Based on the way they've tended to guide and the fact that we're, looking at a Q1 report, how do you interpret what some might be seeing as conservatism here?
Sure. Thanks for having me on, John. So the full year revenue guide, I think, just reflects the upside that we've seen in net new ARR. That stands for annually recurring revenue, as you know. And frankly, the revenue guide here, I think, has historically been very much of an underpromise and overdeliver. And particularly as that net new ARR continues to show upside, it actually beat our estimate this quarter. You see the revenue follow that going forward. So I agree with the idea. Remember, this is only the first fiscal quarter for CrowdStrike. This team is no stranger, again, to underpromising and over-delivering. And so I do agree with that point on conservatism here.
What are some of the factors that you see affecting the way CEOs are giving that guide? We're about 4 quarters since there was a real demand question in cloud and in a lot of enterprise software. We have the hyperscalers talking about customers looking to save money versus this AI boom now that it's exciting, but you wonder how strong it's going to continue to drive these transformation dollars.
Sure, it's a great question. I mean, I think that the two things that we hear consistently from across our management teams are, first, just in this type of budgetary environment, that incremental dollar spending still gets plenty of scrutiny, particularly for big deals. And CrowdStrike can sign some big deals. I think the second thing that we hear is, as AI moves up the list in terms of spending priority, that's going to take away an incremental dollar from other areas as well. And so I think a previous speaker was just talking about some of the mixed performance in some of the software companies that reported this quarter. That might be one of the factors that's contributed.
Saket, finally, is this dangerous for some other cyber names? CrowdStrike has been a consolidator. It is one of these platform plays that's making the argument, hey, why buy from all of these disparate vendors? Get it all from us. If they're being conservative, do investors need to be concerned about what other cyber names, smaller ones, will do?
No question that CrowdStrike is becoming more and more of a bellwether for the security industry. I think it's going to really depend on what George and Bert and the team at CrowdStrike sort of say as they characterize the environment. But listen, I think at the end of the day, these guys beat their net new ARR commentary. They're raising revenue and EPS guide. I definitely want to call a spade a spade, and I thought this was a good quarter, and I think that's what you're seeing in the stock. I think, again, this team has been very conservative, right, and very prudent in how they guide, and I think that will be the other message that we hear on the call.